Where are CalVet loans at today, rate-wise versus VA?
So today, if you qualify for the CalVet's best of rates, the rate would be at 574. To quote you exactly, I just call it 575. And if you were to shop it on the market today with VA rates with a 1 point cost, you'd be looking at anywhere from 699 to seven and a quarter, depending on
If
what.
you're a veteran and you haven't heard of CalVet loans, you are going to love today's video. CalVet loans are not your traditional VA loan, and right now, CalVet loans can save you thousands of dollars in interest payments. Today I sit down with Irvin Lopez. He's a residential lender with Cross Country Mortgage, and he explains why this program is so attractive right now. If you get any value out of this video, be sure to like and subscribe. And without further ado, let's get into it. But Irvin, it's great to have you.
Yeah, thanks, Cody. Thanks for having me on. I've been in the industry 20 plus years, and talking about VA loans, or what we're going to talk about, the CalVet loans, a little bit close to my heart because I do have a VA loan on my current house. Thanks to my wife, she's a disabled combat war vet, and through her service, we'll be able to take advantage of it and understand the pains and struggles for other veterans trying to get into their first home or getting into investment properties using their VA entitlement as well.
Perfect. So I think a lot of the viewers have maybe heard of a VA loan, especially if they served. But over the last few years, I haven't heard anyone say a CalVet loan or bring it up or quote it when I've been working with clients. Right. Can you tell us, what is a CalVet loan exactly?
So a CalVet loan is it is a VA loan, right? And it's not like service to the open market by like Bank of America, Rocket Mortgage, or some of the online lenders out there. It's actually serviced by the state of Department of Veteran Affairs. So the mortgage never gets sold off, in that aspect for a CalVet loan. The reason why right now the CalVet rates are a lot lower, or they're allowing the subsidy, is because they're on a certain bond. For example, they're on the funds they bought like a year ago, right? And then they bought a pool of funds at that bond, and their specific niche is to offer that for California veterans. A, to allow, one is if the rate's actually beneficial or lower when they are on that bond, and two, it's a lot easier to qualify for like a CalVet loan. Typically with the VA loan, you need to have approved what they call DU eligible or DU approval. With the CalVet loan, you don't even need to have a credit score. So it's in-house underwriting at their discretion. Like we hope, that you have a credit score to get you those lower rates, but it's not automatically a requirement at this time.
And so does someone have to be a veteran to qualify for this and have an entitlement that they can use?
So yes, they do have to be a veteran. They do have to buy a house in the state of California specifically. They do not necessarily need to have entitlement or partial entitlement, or if they're in active duty. So full entitlement is, let's say you've already done your service, right? You're buying your first home. Partial entitlement is when you have VA loan on your first home, right? You want to rent that out if it's a 2 to 4 unit or what have you, and you want, or a single family or a condo, and you want to buy your second home. And that's what they call partial entitlement. What the CalVet loan will also do is, with the traditional VA, they'll take what entitlement is left. So to give you round numbers, let's say you have one loan at 900,000 VA, and you want to use the second home at 900,000 or higher. Sometimes with your traditional entitlement, you may not use that same loan amount. So CalVet will allow you to go higher and use even higher than your full entitlement, typically 125% of what you currently are using as is.
You mentioned earlier a couple differences between VA and CalVet, so different underwriting. And you also mentioned interest rates are lower right now because of where the funds are coming from. Can you just expand on that a little bit?
Yeah, so let's say, for example, rates were a point lower a year ago, right? And let's say CalVet bought a bond of funds of like, let's call it 100 million. Just to use this as an example, I don't know what specifically they used it, but just to, keep it vanilla. Let's say that coupon was at 575, right? And because they're on that coupon of 575 and they still haven't used up all those funds, they're still on that bond from a year ago. That is why CalVet is able to, if you qualify, right, for the lowest rate of their, debt to income ratio and within what that's called like their price bucket. That's why you'd be eligible to qualify for that lower 575 rate.
Let me break it down and let me know if this is correct. So, if
Sure.
I'm a
I'm
veteran,
sorry.
let's say, no, it's totally good. So let's say I'm a veteran. I'm shopping for a property, 1 to 4 units, and I'm looking at VA loans and I'm looking at the CalVet program. So the way I understand it is CalVet, they have these bonds where they raise money so that they could go lend it out to veterans. And let's say they sold those bonds a year ago, right? At, let's say a 5.75 rate. Well,
Right.
we've been in an increasing interest rate market. So
Right.
they were able to sell them at a lower rate versus where VA is today. So VA adjusts daily, from what I understand. So if you were to shop for a VA loan, the rate would be much higher today since rates have been increasing. So can you tell us where are CalVet loans at today, rate wise versus VA?
So today, and the one thing with the CalVet loan, they do charge, as for their service for getting the rate, they do charge 1 percentage point. So let's say if your loan amount is 900,000, the 1 point charge would be $9,000, right? So today, if you qualify for the CalVet's best of rates, the rate would be at 574. To quote you exactly, I just call it 575. And if you were to shop it on the market today with VA rates with a 1 point cost, you'd be looking at anywhere from 699 to seven and a quarter, depending on what online lender or conduit you go through. So I'm even on a mortgage payment basis, you're easily on a $900,000 payment difference. You're looking at least at a payment savings of $800 to $900 a month going through CalVet versus not. So it's,
Yeah, that's incredible. So it's a 1% to 1.5% interest rate difference if you're able to
yeah,
go CalVet right now, and it's just because we've been in
yeah,
an increasing interest rate market, and so
right,
I think that's probably why it hasn't come up in the previous few years because interest rates were decreasing, and so CalVet, if they sold bonds, and then interest rates went down, VA comparing to VA rates would have been lower. So most people would have just gone the traditional VA route, right?
right. And the reason, like a lot of, and we're not the only lender that's signed up with CalVet. There's a few other ones out there. And I haven't done my homework to find out who they are, but we're not the only ones, but we do partner up with CalVet. The other thing that a lot of, like, if you go to market with like Rocket Mortgage or UWM, they don't want to do these loans because there's no money in them. So I'm dropping my margins for a service to the veteran, just because if rates are the same, great. But if there's like a big disparity, like a point to a point and a quarter, point and a half, I feel as a mortgage advisor, mortgage broker, lender, you're doing a disservice to your client if you don't have that opportunity to do what's conscionable in that regard.
That's great. I'm sure your clients appreciate that a lot. And so
Yeah,
a lot of the viewers of this YouTube page are small multifamily investors. Is
sure.
the CalVet loan, are you able to use it on like the 2 to 4 unit properties?
Yes, you can. You are able to use it. You are able to do 0% down. I'm going to go into phase one and talk about it. If you do not have any prior rental experience with a VA loan, you would have to get a hired property manager on the contract to use rental income to qualify. Now, if you don't need to use the rental income, if you don't need the rental income to qualify, you're good, right? So we'll take 75% of the overall rents, right? In general, and then, but also it would be like the property management fee, overall rents. Let's say property management fee is $500. Let's say rents are 10,000. I'm just giving round numbers. So it wouldn't be 75% of 10,000. It would be 75% of 9,500. So the they would need to get a property manager in order to use those rents to help them qualify if they need that.
Got it. Okay, good to know. And I understand there's also some differences with insurance with CalVet. Is that right?
So yeah, you do have to have. I did bring that up on my bullet points here for you. So on the coverage, it does have to have um, 250 to 500 deductibles with a 100% rebuild clause. So your insurance premium would need to be a little bit higher than what is traditionally needed for like a conventional loan or like a regular VA loan. So your coverage has to be a little bit higher.
So, Irvin, is there any difference in debt to income ratio with CalVet versus VA loans?
Yes, correct. So if with the VA loan, if your debt to income ratio, which is like your income, which is all your debts, if it's at you know below 60% versus 30% with the VA loan, the rate stays the same. With CalVet loans, they do incentivize you and they do offer you a better rate with two factors. One, if your debt to income ratio is 45% or lower, the rate is typically a quarter better, right? And the other niche thing is that CalVet really wants to help out first-time homebuyers or first-time veterans get into a home. So if you are 25 years or less in service, you will get the lower rate versus if you've been out of service from the VA 25 years or more, the rate goes up a little bit higher, a quarter percent. So let's say if you're at 45% under debt to income ratio, right, and you're at 25 years or less, rate would be at 575 versus 25 years or more, you'd be looking at a 599. Still better than VA market rates, but just something to consider when you know you're searching and looking around for type of loans that may make the best sense for you.
So, Irvin, I know you had a few more bullet points on the CalVet loan and some things that people should know if they're interested in this. Do you want to, I guess, tell us some things that you think people should know?
Yeah, I mean, if you have your funds for down payment, awesome. Whether you're doing a 1 unit or 2 to 4 units, there is also with CalVet a 3% down payment assistance program. So what it would be, so on the 3% down payment, it's only for closing costs, and it cannot be used in conjunction for a seller credit. So let's say your closing costs, I'm just going to use round numbers. Say you're buying a 2 to 4 unit at $1 million, right? Let's say your closing costs are 30,000. You can use that 3% to qualify. It's not going to hinder you from qualifying. There's no payment on it for the first 10 years. There's no payment on it. For the remaining 20 years, it's going to be at the same interest rate that your first mortgage is at. So let's say your first mortgage is at 575. The down payment assistance would also be a 575. So if you do need it and you're short on funds to qualify, I would just use it if take advantage of it, but pay off that 3% down payment assistance or pay off that 30K in the next 5 to 10 years before you got to start making payments on it. If you ever refinance or sell, you have to pay off that 3%. No matter, so it's not a forgiven down payment assistance, but it's if you don't have that 3% or if you don't have the funds for closing costs, it can be a huge help.
So, Irvin, if someone's interested in
Yeah.
learning more about this program, how can they get in touch with you, or where can they go to learn more?
Easiest way to get a hold of me is go to my Instagram at Irvin Lending at irvinlending.com. Shoot me a DM Or also my digital business card is www.meetirvin.com, and my email, Instagram, phone number is on there. My cell phone is my only phone, so feel free to reach out, and I'll respond as soon as I can within due diligence. So.
Perfect. Well, Irvin, we
Or,
appreciate.
or if they just have questions on how to set themselves up on how to buy a property in the next 6 to 12 months, if they're still in the infancy stage.
Perfect. Well, we appreciate the info. This is a really exciting program, especially as rates continue to climb. I think people are going to be excited that they may still be able to access some of these low interest rate CalVet funds. So we appreciate you taking the time to jump on a call.
Awesome. My pleasure. Thanks so much, Cody.
If you got any value out of this video, be sure to like and subscribe. And remember, invest well, trust Cody Charnell.